Welcome to the People's Economy Podcast, the only podcast where we keep it all the way real. Our mission here is to educate you, fill me with some knowledge, so you're a little bit more on point, have something you know before you learn from this episode, so you can go out there, razor sharp, with your swords sharpened up, keep that knowledge, and power yourself. But as you notice, the economy's starting to reopen. So as far as like stock wise and investment wise, things are going to change where people are going to place their money, what they're going to invest in, as well as more technology driven stocks, as well as even just jobs and things of that nature. Like how are jobs going to shift now? How do you guys think technology is going to change the reopening of the economy after all that we've been through the last couple of months?
You want it, Dodge?
I think it's going to be more, the technology is going to be more of a basic needs more than it ever was in any line of business nowadays.
I agree with that because even with with my real estate company, they were already very technology driven with the documents more than any other company I've been with. So I'm here trying to figure out how to do like electronic signatures, which would be a company like DocuSign. That was a good stock, and I was looking at it. And it's funny how stocks work because it must have been like last September. I just happened to see on CNBC. I recognize the stock because we use it. It was like $45, $55. They put our earnings went to $65. I was like, yeah, that might be a good buy. So like maybe I missed that $65. Didn't buy it a year later. It's like $165 right now for that same stock. So it's hard to read with technology and investments and things like that. Sometimes it's hard to read. And
Yeah.
I say you go with your gut feeling. If you have that feeling, buy a couple of shares, man. You don't want to miss out on them opportunities.
So you think the technology is going to be like more functional and more something that's going to be added on to how you invest in the stocks?
I'm actually noticing that a lot, even just in general. Like, if you look at your phone, it's more advanced than it was like in February. Because while all companies were staying home, they were actually upgrading their systems to be able to supply the stay-home companies. So technology within 3 months made like probably the biggest advancement it's ever made because it's quicker now, it's faster. It's more compatible to more things.
We more or less had to catch up with the times.
Or the times caught up with us one way or the other, right?
Yeah, I was gonna say it's more like the times caught up to us. Like we wasn't really. Most people was doing their regular thing, and then the times told you that you was essential or not, and then you had to switch and go with that. But as far as like the technology, I think that a company like DocuSign, that's a good example of one that might grow because people are going to do more e-documents, more email correspondence and things like that. It's not really going to go back. It was kind of going away from talking to people now, like really talking to people. So now it might just be more email, text, and that's acceptable. That's like an acceptable way to do business now. You can do big business like that now. It never really,
it was, like you said, it was like gradually, but then like 20x in 3 months though. Like now it's everything.
Right, everything now. It just like this thing just like sped everything up. Everything just got like fast forwarded right now. So we just in the fast forward mode. So you got to be thinking ahead. But technology is always where it's at. That's definitely still where it's at. The more innovative, the better. No.
And then when these companies like I was watching an interview on CNBC, Bloomberg TV with the CEO of Cisco, which is like a database and all that for his office. They were more like phones that you pick the black phone and always pick up and use. That was them, but they had to advance. They had to become more cloud-based. So they had people coding around the clock just to meet the demand of who needs their platform now in the stay-home economy. They were trying to catch up within a month. They made advance 2 years in like 2 months around the clock, upgrading their system to catch up to us. What's going on?
So what are you saying? The business is catching up to the times. So you think that's gonna help like more tech businesses go public in the stocks?
Yeah, you're definitely gonna see a fluctuation. What's called IPOs. When they offer publicly. Yeah, I think there's gonna be a lot. That's actually been a trend. Is tech companies going IPO, then them going through the roof. But then last year it kind of like end of the year kind of slowed down because they went so fast. And if you bought the ones at the end of the year, they might not have ran as fast because they were already overhyped. But I see that trend coming back right now, where IPOs are going public and going through the roof. These new tech companies.
And that trend that happened before, what sparked that? Would you say? Like the coronavirus sparked this one. What sparked that one?
I think
just curious.
The stock market was doing so good that like you can throw your money at any time, like the last couple of years, and make money on it because it just kept going up and up and up. So I think the hype and the momentum of the all-around market just drove the IPOs out once they went public. It drove them up.
Yeah, maybe, like a bubble. It's gonna burst eventually.
Yeah, I think it kind of bursted. Like the first half of the year last year was IPOs. The second half it kind of bursted. I think you got to watch and pick and choose. I think there's still IPOs that you can definitely come up on some nice earnings on. So
you think there's good money to be made with the tech companies right now if you observe the present times?
Yeah, definitely. There's a company called let me look it up right here. It's Portis Acquisition. They just actually acquired a company that's doing like some type of hybrid company for commercial trucks. The stock's up like 80% in 1 week since they were gonna go public last Friday. It was going public in a different manner. They usually when you go public on Wall Street. They were acquired by another company. They went public being acquired by a big acquisition company, and that stock actually ran up this week a lot. They're doing like hybrid, like they're talking about now. Now you gotta have something environmentally. So we talk about in the show, you gotta be environmentally friendly. That's like a new trend. So it's like perfect timing for something like that. It's more hybrid, so it uses natural gas and things of that nature. Yeah, that trend, anything that they're gonna do, save the environment, things like that, I believe are gonna run up.
So it's really in the big profit investors that's gonna judge what the economy's.
You think things like solar energy too? You think solar energy?
I was looking at some of those companies earlier this year to invest in. I haven't yet, but yeah, I think solar energy could be a good sector too.
It could be. I know it's not not volatile, but I know it's not like the super trend right now. But maybe it might have to be. It might have to be eventually.
Do you think right now? I'm sorry. Do you think right now is it a minimum risk that involved with going into investing in a tech right now? Like, is it a minimum risk?
It depends.
Yeah, I don't know if I say minimum because it's like the Nasdaq is the tech heavy tech index fund. They said an all-time high, so you're going in at an all-time high. I mean, that's the risk right there. It's high as it's ever been, so you're buying at a high, not a low.
Yeah. No,
the risk anyway is always you could lose it. That's always the risk.
That's one of the rules you would say.
If you just look at it like that, just look at it like I could lose it all. I could lose it all. That is the risk.
You could say that's like the number one rule, right?
I don't know about number one, but it's one of them. You could lose it if you don't do the right thing. If you don't learn, you could lose all of it. And I think that's where people get discouraged from, because they don't really learn how to navigate it. They just think if you get in and you don't do it, if you don't pop right away, then it's just over. That's not how the market works. And you gotta like listen. You gotta listen to stuff outside the market too. It's like you gotta know about what companies are popping and who's doing what, the movers and the shakers. That's who drives the market. So it's not even really about it's about knowing like over here they doing this, so I need to get on this way, the solar or the DocuSign, the more e-trading, e-commerce. That's where people are going right now.
I think sometimes the way Jay's talking about is the best way to invest. So if I would have followed my instinct last year when I first started buying stocks, I would have bought Tesla, Nvidia, and Apple, 3 companies had the largest gains. But I didn't know enough, so I listened to other people, and I listened to actually a very popular platform. I bought stocks on there, but they kind of went flat. If I would have followed my gut instinct, I would have made 10 times more money. And I was going off, like with Jay was, I was going off the knowledge of the industry, like, you know, self-driving cars, Tesla. And I didn't know what NVIDIA was. I said, whatever company's going to make the chip that's going to compete with Tesla and self-driven cars, we should buy, which happened to be NVIDIA. And I was like, I'm going to buy Apple's because that was like a hot company. Without knowing anything, I would have picked the 3 best companies. Sometimes you don't want to overanalyze and try to go too technical, then you like freeze yourself up.
No, so you're right.
You wouldn't say tonight you don't use money that you're not willing to gamble away as your rule one?
100%. Be willing to lose 100% of the money you put in. You just nailed it on the buy.
100. That's how I went into it. I might lose every penny that I put into this, and that's okay. I'm all right with that. That's how you got to go into that. Because then if you come up off it, everything's a gain after that. Everything's like amazing after you know I could have lost everything.
And that kind of makes you in it for the long run at the same time.
Yeah, exactly.
Which is another rule you would put under the rules, right? Rule book.
I don't think you can go into day trading. Like, I think you have to go for the long run. You have to learn. Like, the gentleman I know is a good investor. He's talking about day trading now, but he's probably been investing for like 10 years. Now he's ready to day trade. Like, you have to go for the long run. You can't learn in one day how to day trade. You're going to lose your money, like Jay said, and just get discouraged.
Right. That's why day trading, that's not the way to like come in. You could do it more slowly. You know what I mean? You could tiptoe into the market. You don't got to go crazy. Just pick one thing that you like. You know what I'm saying?
The one thing that makes sense to you.
And follow the charts. Like learn that one, how that one works. Learn how the growth of that one stock, and then you'll know the game. It's like you got to get in and swim. You got to know the game and how it works first. So pick
the only
that you
way
like.
to get in is to be in. So you pick that
the only way.
That one company that makes sense to you.
Well, I'm just saying, it don't got to be one, but you know what I'm saying. Like pick something you know. I'm gonna pick, these 5, and they're like pretty much a go. They're the FANG or the Watch.
No,
those companies.
I get what you're saying. Yeah.
And just go in off that, and just make that your platform, and be ready to lose 100%.
That's definitely
don't
a
even
wise
sugarcoat.
Move to make. You're right about that. Definitely.
It's always high risk, probably.
Yeah.
Always high risk. Yeah, it's always high risk.
Yeah, investing is a high risk sport.
It's high risk. That's it. So there's no mid. It's just high. It's just high, and I got it. It's just high risk, and you get it.
That's like an adrenaline, like, that's something that,
That's what I'm saying, right.
How do you avoid those mistakes that, get catering to your
you don't
adrenaline?
Want them.
You don't want to.
You don't want to avoid the mistakes. Do the mistakes. Do them. Make a mistake.
Avoid the mistake.
Yeah, don't try to avoid. That's what I'm saying. Go in. You want to do the mistakes. That's how you learn. Oh, I did this wrong, and now let me do this. That's how you do it. So you don't even want to avoid the mistakes. Go in, but make your own mistakes. Like, make your own mistakes, not based off other people. I mean, you take other people's thing, obviously, but you make it yours. Like, you make it your philosophy, and then you go in with that. But take losses. That's all right. You're going to take losses. You're going to take them anyway. So just take them. You don't even want to avoid them. You want to hit the loss. The quicker you like hit the loss, the quicker you can recover and learn and be better, like right away almost. Like you can be better now. That's how it is.
What's the importance of knowing the company that you're investing in? Like, as far as to avoid make sure that they're not a fad. That's gonna, like a fad company that's just here one day and gone next.
I get what you're saying. Well, pick there's standards though. There's standard brand names out here.
Oh yeah, like knowing the brand names basically, right? Like going off just their name basically.
Yeah, if you do like Amazon, Apple, there's stuff that's not really going away. There's ones that's not going away. Pick those, because everybody probably has some involvement in that anyway. Everybody either got an Apple phone or you use Amazon.
Yeah.
Most people have a retirement plan, 401ks and pensions, and they're putting their money in those companies, and that's why money is all involved indirectly or directly with all those companies, the big companies, Amazon, Facebook,
Right.
Microsoft. That's why retirement funds are
Since
like that.
You're right.
since like the times that we're in as economy, you think since you brought up the wireless internet, Jay, do you think like maybe how we do business here in our home right now, you think it will be more home based as far as wireless internet in the future? You think it'll get turned like more of a home based thing?
Like what? Will more people be working at home, you mean?
Oh no, like with the wireless internet, like will people try to choose different carriers that are more not foreign? Like home?
Oh,
Yeah,
okay. Oh, that's a good question. I mean, I think there's a lot of business going on with that right now, though, as far as
yeah.
phone carriers and
Because
that. But
that's
it's
a
all
big
international
conglomerate.
anyway.
That's a big conglomerate anyway, right? So it
It's
could
pretty.
go
They're
any.
all pretty international anyway, so it's pretty much.
You got to stay like that, no?
They're all international. But
So it would have to. It would most
I
likely
think
have to
that's going
stay
to
like
affect
that, right?
us. I don't know, but I think that's going to affect us. Like we're going to have to. Um, there's going to be more trading wars for that kind of
Yeah,
thing. You
right.
know, but let's like Verizon, all those top companies. They're going to have to be
Okay.
more. You have to add. They're going to have to add more premium packages to their thing. They're going to have to add more premium things to them. Now they got to have a package for the home business owner that needs more gigs of internet or whatever. You know, they might market it like that and have a package more for the home business owner now, because that's probably going to change in the next coming months too.
So that's something to look out for when the changes to get in it on it as investor, right?
Yeah,
That could be some.
read my mind. Those can be some good stocks you can research, like Verizon, Sprint, AT&T, that type of sector.
Exactly, because everybody got one of them. Everybody has one of those that have their phone pretty much. So start with practical. It's pretty much like about practical stuff. I think that's what that'll make you stick with the stock if you pick something practical that you know. It won't feel like it's this foreign thing. Like you'll be like, at least I know the thing that I'm invested in. I know the company. You know what I'm saying? So if you Nike, all right, bet. You know what I'm saying? I'm gonna do Nike, but let me just watch how Nike works. Let me see what that does. But at least I know what Nike is. It makes it more familiar.
Do you think businesses have to be more like do their business homegrown, like locally than foreign? Like even small businesses.
Well, what you probably could do more international now, right? Because now if you don't need if all you're using is internet, you could be international.
Yeah.
So I think it opens it up more worldwide.
Yeah.
You got the choice though to be local though, maybe. If you want to be local, you could be local, but it's easy to be international too. If you make a website, can't somebody from Australia buy a shirt off your website? You know what I'm saying? Like right now, if you did that.
Oh yeah, it'd be in your best interest.
They're talking about e-com. That's another great stay-home platform. Investors can look at companies like Shopify, Etsy, Amazon, Alibaba. Definitely
those are the ones.
Opportunities over there.
Yeah, those are definitely the ones. The e-com is definitely where it's at. There's gonna be way more of that. That's gonna be the new mom and pop. That'll be the new mom and pop.
Other ones coming. Every region has their own e-com, like their own Alibaba, Amazon. Something as like Josh said before, you're gonna see a lot of them IPO, and they're looking to get investors to go public in the New York market. Maybe like a Amazon, like an Indian version, different regions public in America.
Okay.
Dr. was asking earlier.
Okay. That'd be interesting. That changes a lot of that shifts the market around if that starts happening. If there's a lot of Amazons or things close to like that, that kind of shifts things around. It's going to be interesting to see how this all settles when it does.
They're still trying to like see where the bailout money went to last time in the economy. Then that they could figure out where the money is going to go for the next one. You feel?
Well, supposedly that's going to go through, but I mean, we don't.
Like if it's going to go to a state or the city, right? Is it going to go through them?
Might go to everybody again, maybe,
Yeah.
probably maybe, but that's money to be reinvested. That's money to get.
That's what they want. They want the money to go towards it.
It can work for both if you do the right thing with the new stimulus, the second one. If you did something right with it, it can, because you don't need much to start up a biz. You can do right.
Yeah.
I think if you wanted to open like a coffee shop or like a shop, something like that, I think this might be a good time to get in on that. Actually,
Yeah.
I think
a lot of
this might
companies
be a
went
good
out
time.
of it, so it might open up the market. Yeah.
And it'll be on a relatively lower side. I think even trying to open a business for like a storefront, since most people don't want that. But some things got to operate in a space. But I think you could get it for probably a premium on the market right now, more than ever, or more than a long time.
Some of our leader entrepreneurs are screaming that this is the best time to open up a business. You will succeed.
Right.
It's out there.
Right. See? So right now, you see the mentality. That's the mentality you got to do. You got to say now it might be time to even open a biz, because now we seen a whole shutdown. If cats made it through the other side of this by the grace, then all right, we could do it. We could make something else. We could get to the next 2.0 step.
So like you said before in other episodes, the basic need companies, if you could pick up on that market, you could open up a business during this economy right now. If you pick up on like a basic need, a small
like
business.
a restaurant.
Yeah, if you want to do a small business like that.
Well, I think restaurants got to have maybe not have to, but if you able, you got to have outdoor space. So I see them putting up like outdoor space on a lot of restaurants now that didn't have it before. Now they have a couple outdoor seats so you can sit. I don't know if that's like a mandate. I don't know if that's what the rule is, but it has changed. It has changed, but it don't mean that other things can't, be established and open and should be. A lot of things are not going to reopen. We need new spots to fill those gaps.
Yeah.
But what do you think? What do you think are the best? I don't want to say the investments, but what is the next market to look at as far as where to put where if you wanted to park a little bit of an investment somewhere? Is e-commerce still it, do you think, or is there something else ahead of it that is about to blow?
I would definitely say e-commerce, along with all stay-home type companies like this. Like what platform we're using, Zoom is a great one to look into. Even because of e-commerce and Shopify and Amazon, I would look into maybe UPS and FedEx as well, because they're going to see a boost for delivering those packages, those e-commerce packages. You can look into Etsy, might be a great company. You can even keep simple companies in mind like Procter & Gamble, Johnson & Johnson, because stay home, you're at home using more of these products. Even simple companies that make snacks like potato chips and cookies, they're seeing boosts in revenue because you're at home, so you're eating more comfort food at home and things like that. So there's all types of companies to look at as stay-home companies. You can look at, like we were saying, with the technology, a company like Adobe, because businesses going online. Companies are staying home, doing business from home, through emails, e-contracts, and all that. Microsoft is always a great company to look into. Video, which we spoke about, which is a chip company. Things
Basically,
like
you would want to look into companies that dominate in their domain, you would say, right?
yeah, I
Jerry?
would start with the big dogs in each, the dominant companies in each sector, the big dogs, the stands. Yeah, I would start with those.
Yeah, that makes sense.
A template rule.
The template rule. That's definitely a template rule. That's all you gotta have.
But then
Yeah.
for those, you can trickle down, like, like maybe the chip that puts the company that puts the chip in your Google phone, and like technology companies trickle down from what do the major companies use? What platforms do they use? Like Twilio for text, like emails. When you get text from like a company, like
Like,
we have
you got to look into those companies.
that would be
You know,
when
you
you get
usually,
when you get
usually,
an ad on your phone, like this is
yeah.
where you go to Timberland and you sign up and they send you 50% sale this week. That's a company like Twilio. So you start with the big names, like you said, then go down, see what they use, what technology companies they're using to grow their brand and their business. You can look into those.
That's smart. No, that's pretty much the
Trickle
golden,
down. Yeah.
the golden rule.
With the
Oh yeah, I
old
do see.
the old catching the trickle down effect.
Yeah,
I got
then
you.
go to like AMD is like a chip stock, Intel. Yeah, exactly. That's trickle down effect.
Uh,
But why is that the best? You think is the trickle down effect the most, like, for the long term? That's long term.
That's definitely
Not that
long
nothing.
term. Yeah, I
5
would say
years.
short
5
term
years or more.
Way
because
longer.
What'd you
like
say? Way
but then
longer.
again, it might be a quick investment because it might just jump because like let's just say out of nowhere Amazon's going to use this little company. You might be able to buy it that day. The stock goes up like 100% that day, sell it the next day. So sometimes when those big companies announce that they're going to do business with one of these smaller companies, you'll see that company jump, and you could get in and out of that as well. You got to be in the game every day, watching it and look for opportunities.
Yeah, that makes sense. That definitely makes sense. You got to keep your eye open for what's coming and what's on the horizon, what's doing right now. That's pretty much the best way.
Yeah,
And like I
a
said, it's
constant
100%
thing. It's
loss.
not like you're going to research one day and then you'll go out and like, if you have to be in the game every day, all day, you got to be in it to win it.
Yeah,
And go with the big dogs.
it's long term. This is long term. You got to play for many years. That's why it's not even so much like gambling. It's just like you putting it in, and I'm just gonna let it ride. You know what I'm saying? I'm just gonna let it ride till the wheels fall off. That's it, forever. Whether it goes up, down, I'm gonna ride it. So that's the better way to look at it. And then you'll feel better about going through the losses. Not really losses, but the learning periods. You got to go through the learning period.
Yeah,
So
and
what would you-
invest, don't gamble. Invest, don't gamble.
Invest, don't gamble. Don't gamble. I don't like gambling, but I'll invest though.
How do you gauge the company's advantage over their competition in the tech world, in the tech investing? It's hard to do. It probably is really not. Is it even possible?
Yeah, you got to go into your research. You got to read all the articles and all the companies. You got to look at the
Oh,
stocks. Research.
all right.
Research.
You're not really going over how they advertise themselves. It's more about knowing them as a company, right?
I mean, you definitely want to look at advertising companies, but right now the biggest advertising space in digital is Google and Facebook. So those companies. Those are great advertising companies you can put your money in.
Yeah, don't have to. Google and Facebook don't even have to do nothing at this point. People are going to them. They know what it is. Yeah, they advertise their company.
They're trying to sell the shop on Amazon on Facebook and Google. So
Exactly. So that's where that space is at. That's the new frontier with that sort of investment, or whatever you want to call it. That's more what that is. But it's definitely different now. Definitely different.
it's definitely changing the way you invest now than before, right?
I think you got to be, you got to be a little more. You got to shift your momentum a little bit. You got to shift it a little bit, just a little bit, because this is a reset of everything. So
Yeah,
just take it as that.
we're still going through it, so
It's
I
new.
don't know
It's
what's
still
going to end
building.
up, how the ship is going to stop, where the play is going to stop at.
I think it just keeps going at this point. I think it's open. I think the economy's it's open. I think it's gonna try to come back. It's gonna be down. It's like trying to start an old car. You know what I'm saying? It might take a minute, but it'll start again. Cats is just gonna have to be more savvier with how you put your bread in certain places now. It's changed. Hopefully your mindset changed in this last 3 months or so, 3.5 months. Hopefully you added something to the arsenal. Hopefully you added something to the arsenal of knowledge. You added something.
If not, that's why we're here. We're gonna add it for you. People's
Right.
Economy Podcast. That's what we're here for.
Exactly. Exactly. Fill your clip up.
Yeah.
Get you to fill your clip up. That's what we do. That's what we do.